Good morning. It is Hump Day Wednesday, December 4th. Just so everyone's aware, the Trendspider team did get in touch with me yesterday, and they've heard you guys about training, and they've had a lot of questions. So I'm working with them to get everybody who took advantage of the Trendspider Black Friday and Cyber Monday deals and the training, the unlimited one-on-one training. I'm working with them to try and provide some better opportunities for you guys. So it's a little more catered to the listeners of this particular podcast, because it was one of the largest affiliate that they saw as far as the trainings goes. I think, you guys have responded. You guys wanted the training. So I think they'll do something like that in the future again. But just so you know, they would like feedback. So use the contact us button in the bottom right down here. You can't see it, but if you go to your Trendspider page in the bottom right hand corner, there's a contact us button, and you can use that to give them feedback directly about the training, about things that you want to see, about things that you want to hear about in your training, blah, blah, blah. You can always do that. The other thing is they wanted to ask me if I hear anything, good or bad. This is how good Trendspider is about their customer service. They want to know from you who got the training whether it was good or bad. And they're serious about that. If you didn't get what you needed out of it, then you let me know or you let them know, and they will do a better job. Again, this part of the reason why I'm an affiliate with these guys is because they are so good at customer service. Remember, before I was an affiliate, I was a paying customer. And if you want Trendspider, you can still go to the link tree right here. And there is no, I got to change the link tree. There is no more Black Friday special, but you can still get it for $53 a month. You don't get the unlimited one-on-one training, but for $53 a month, you get the 4-hour algorithm. So, and if it's within your budget, go up to $98 per month, because that gets you a one-on-one training session. It also gets you the AI Strategy Lab, and that's a big one. Okay, the AI Strategy Lab, if you have Trendspider and you've signed up for it, right over here, the AI trading models, you can train a model to basically look at all the indicators that Trendspider has and do this. Jason goes over this on YouTube. I will include this link, but the AI Strategy Lab is a game changer. Here's my prediction. And this is just my prediction. My prediction is that the Strategy Lab, for somebody, comes up with a better algorithm than the 4-hour algorithm for you to trade. Because what it does is you just tell it, hey, I want to trade this name, and I want to trade it with this risk reward. And I want to look at these factors. And you can include some indicators. You can include just, hey, I want to buy at the low and sell at the high. You can do that. And it will go through and it will try and find indicators within Trendspider's indicator universe, which you have up here. It's a huge list of indicators, and you can see it all through here. It's just an enormous list of indicators. And it will go through, the AI will go through and say, what's the best indicator to use? So I do believe that those trading models, right now it's still in its infancy stage and it's beta. But I do believe that at some point in time over the next 6 to 8 months, it will come up with a game-changing strategy. And you may be lucky enough to develop that, because right now we can't share these. So if you develop one that's absolutely killer, you would have to go through and tell somebody exactly what it is in order for them to set it up. So I do think that that's the next thing coming. If you want to watch this video, you just go over to my link tree and sign up for the newsletter. The newsletter is free. It is 100% free during the week. It's just paid over the weekend. And I do offer commercial-free podcasts to the paid subscribers. So, but you can look at the newsletter and see exactly what, and I'll include this link to Jason. It's on the Trendspider YouTube page. Building an AI strategy with the Strategy Lab. It is very simple. You need to play with it. This is a skill. Prompting this stuff is a skill. So go ahead and play with it. Now, one thing that I do want to point out is the VIX, because the VIX is a volatility index, and this is just something that you can play leveraged ETFs on this. You can buy an ETF that tracks it, blah, 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 blah. It likes to sit at 20. And right now, we're at 13. This big spike that you see in the middle of your screen, that is when the Japan unwind trade happened. It went to 60. Okay, that was a crazy, I think it's 65 was the 52-week high. So that's 65. This likes to live at 20. If you just do like a 10-year right here, this right here is COVID, and it got up to, it looks like 65. Okay, the Japan unwind trade also, because this is a 10-year, you don't even see it back here, but the spike is going to happen. And volatility, what a lot of options players are playing is that in the next few months it'll spike. And what do we have in the next few months? We have the Trump administration coming in. So just expect that the volatility will pick up. And what happens when the VIX goes up? Typically the stock market goes down. So I do want to bring up Apple. It's continuing to close at all-time highs. The Qs, it is we're going to go into that as part of this Apple, but let's look at the Apple chart first. It's up 0.23% in the pre-market. The algorithm got you in here at 227. Okay, the algorithm makes you 48% over 24 and a half months. I often say Apple is my savings account. I just think Apple will continue to go up. I'm sitting here with my iPhone, my Apple Watch. I have my AirPods over here. I have a MacBook Pro that I'm actually broadcasting on in my iPad Pro. I've got Apple TVs in my entire house. So I am sucked into this ecosystem. And I think a lot of other people are as well. If you buy one Apple product, you typically buy another one. So I think that's what's driving Apple. But we all know that Apple iPhone 16 is going to happen. And it's going to be probably right now you can use Google Gemini on any phone. You can download Google Gemini on your iPhone. It's better than Apple Intelligence. But I think as Apple Intelligence gets integrated and you don't have to go to an app, it's going to be integrated into the Apple experience. And I've experienced that with my Mac Mini at home, where it now will just, figure out a message to reply on text. And I don't even have to type anything. So as that gets integrated into the device, I think you're going to see Apple iPhones upgrades. And I think you're going to see that start to happen. Well, the market is starting to price that in. But that's not what's driving this stock. Okay, what's really driving Apple, it's new money coming into the market. So, Apple is the largest stock in the stock market next to NVIDIA. I think it's kind of the same thing. But I think a lot of people are moving out of NVIDIA and into Apple. Now, when you buy the Qs, you're buying Apple. When you buy VOO, you're buying Apple. I mean, if we just go over to QQQ right here and we go to the holdings, Apple, number one, 8.75%. VOO, Apple, 7.12%. So when new money comes into the market, guess what's going to benefit? It's Apple. And I think that's what you're seeing now is that a lot of money is coming off of the sidelines for the year end, and you're seeing it push up. Now, is there validity to this? Who knows? All I know is this is 65% of my portfolio. I'm at all-time highs. This stock has just been a killer. And they did something rare, which is they touted, that Apple never does this, which is come out and say, yeah, we like this. They've done this 2 times now with AI. They said, hey, we trained it on Google chips. Now they're touting Amazon chips. So when I say you want to have some of these Mag 7s in your portfolio, this is the reason why. I think with AI, big gets bigger. And that's my play. So I just think that when you do this, again, the big 7 will continue to get bigger. Will they outperform the market? I don't know. I mean, right now it looks like IWM is outperforming the rest of the stuff. The Dow Jones is up huge today because of Salesforce earnings. So you had those 2 indexes underperforming the Qs and SPY. And so now they're starting to catch up in the short term. So Apple is also included in the top 20 technology stocks ranked by the Quant. This is a great article. Okay, if you use the Quant and you have Seeking Alpha, go to this article because this will tell you technology stocks saw the biggest weekly net gain with $1.3 billion of inflow this week compared to $1.1 billion the previous week. That's still huge. So the next largest one, communication service, XLC, saw 390 million, not billion, 390 million. So people are pouring into technology, and that Quant just has a phenomenal track record of proving outperforming the indexes. So take a look at that article. The biggest movers of today's movements, it's all about earnings. CRM soared 11%, mixed FQ earnings. But here's the thing. Mark Benioff said AI is going to change Salesforce, is going to change the world. And they guided higher. So again, it's AI and Salesforce is catching up. Is that one finally catching up to ServiceNow? It'll be interesting because I did this a few weeks ago where I have actually CRM, a large portion in my portfolio. I don't own any ServiceNow, but ServiceNow over the last 5 and 10 years has outperformed CRM. So then you have Marvell Technologies. We'll go over that one. They jumped 11% after reporting strong earnings. Sorry, I had to run down. So I'm going to kind of go over Marvell Technologies. Dog had to make a poopy. But shares of Marvell Technologies jumped. And AlphaPix OKTA jumped on earnings. So all three biggest movers are based on earnings. Again, we're coming to all-time highs on the indexes, and I think earnings will need to be good. They will need to guide higher, and that will take stocks higher. You know, Salesforce has underperformed ServiceNow, like we said, but I think Benioff has his ducks in a row, and I think it's good. AlphaPix, OKTA, and they killed it, and we can go over that one real quick because OKTA surges as Q3 results guidance below past estimates, and it rose 17.5%. Now it's come back a little bit. It's at 13%. The market's not quite open, but we'll probably see it. In pre-market, it's at 91, which puts it gap up here. Probably going to fill this gap up to 95 at some point today because that's the last earnings. And what happened? So the last earnings, you gap down because it wasn't as expected. And it came back down, and now we start to turn as the 50-day has lined up now down towards 72. Where's that 72 coming from? Right here. Look at the weekly chart. And if you just look at the weekly chart of this, you can clearly see once, twice, 3 times, and now 4 times. Are we going to see this pump up to 113? Maybe. Has this started to turn? Well, if you look at OKTA, again, this is an AlphaPix stock. So it's a hold as far as the quant goes. The Wall Street, the monkeys, they have it. 41 analysts have the average price target at 101. That's 23% up where it closed yesterday. But remember, it's up 12%. But if you bought this at 91 and it goes back up to 101, you can see they're chasing it down. Is this the change in this story? Well, the valuation, it's a C+. You know, again, their forward earnings, you're paying 30 times. That seems a lot. But the PEG ratio is only 1.16. So their growth is really good. 18% revenue growth year over year. You can look at their levered free cash flow, 25% year over year. Profitability, fantastic. Gross profit margin at 75%. The momentum has sucked. So the momentum has been a problem with this stock. And we all know that that's the hardest part. But the revisions, there were 5 up, 0 down, 2 up, 0 down. That's going to change from a C probably to an A. And so when the quant re-rates this one, I would expect that hold to probably go to a buy. But it hasn't been a buy for a very long time. Back here in September, it was a strong buy for a couple of days. And I don't know exactly when Seeking Alpha picked this one. I don't have it listed, but I think it was earlier this year at a much higher price. Last checked, it was down 8% as of last night in the AlphaPix portfolio. So AlphaPix is going to get a bigger gain. And what do you have? You already have a stock that's down in the AlphaPix, but But Alpha Pick's portfolio is up 184% versus the S&P during the same time period of 59%. Just so happens, I wound up buying OKTA because I bought into the Alpha Pick's portfolio at a very low price. So I'm up like 15-20% on the OKTA purchase. But again, the portfolio is outperforming for me. If you want the Alpha Pick's portfolio, go over to Linktree and you can buy the Black Friday special. Okay, I'm going to go over one stock that is a super buy, that is the highest quant rated stock later in the thing. And you don't get that in Alpha Picks. You get that with Seeking Alpha Premium. So I do urge people, the bundle here is the best bet. Okay, and the bundle comes in at $509 for the year. You save $289 off the regular price. And that's how you get it. But again, OKTA, it's an Alpha Pick. Killed earnings. 15 high flyer stocks that have soared over 100% in 2024 that still have potential. One of these is the biggest mover. So if you go down here to the top stocks, okay, we know that PSIX, I've brought this one up many times. It's down 6% from yesterday. It was down 6%. We're seeing this one hover. But this one, the valuation, perfectly fine. Growth, it is a super small cap stock. But we started looking at this one when Brian brought it up. I think it was Brian in the Facebook group. And he said, hey, this one looks good. It's the top quant stock. That was at like 12, 11. And you're trading at 29. Now, there's no analysts that cover this. The Wall Street analysts, it's one analyst. It's a joke. Their price target is 37, but that's from years ago. Because if you go and look at PSIX in the chart of PSIX and we look at the weekly, you can see it's had much larger prices in the past. So you go back to 2014, this was trading at $69 per share and it has just fallen, but we've recently got this one powered back up. So it is in the list of the top 15 stocks. 15 high flyer stocks that have soared over 100% in 2024 that offer super potential. So this is how Seeking Alpha Premium can help you, because you can look at those and then decide if you want to put more money in. You know, there's a couple of stocks like FLR, Google, Amazon, Microsoft, blah, blah, blah. But again, 15 highest stocks. Now, Jim Cramer, speaking of 10 stocks, Jim Cramer last night listed 10 stocks he thinks will do well in December. Tesla, Palantir, Axon, Texas Pacific, Tapestry, EPAM Systems, Warner Brothers Discovery, Vistra, McKesson, EQT. One that I noticed was Warner Brothers, and this is HBO Max. They announced this morning, which could lead to a significant gain in this stock. They're going to do a Netflix-style password crackdown. Not as aggressive, they said. And this is where it gets kind of crazy. Netflix was aggressive, but Netflix is number one and they knew people would subscribe. But if these guys do a actual crackdown, it'll be interesting, because I again, look at this stock. If you go to a weekly, it's an upper left to bottom right, but you've recently seen this come back up. Now, if we were to look at this next level, if we get to 13, then you're actually setting new higher highs. You've got confirmation. The last few weeks have just been tremendous for this, but it's a stock that just doesn't make money, and it's hard to get into a stock like that. The valuation, it makes sense from a growth standpoint or a future standpoint. You're still paying a lot for it, but the profitability, I mean, it's not there. But you could trade this one. And that's why I like the 4-hour algorithm with things like this, is you can find a trade to get into. And so if you got in at that 786 right now, you're sitting pretty at $10.61. So again, you have to find your strategy that works for you. But the top 10 stocks, I thought that was interesting. Now, there's also a list here, top quant rated cyclical stocks, as that group is expected to outperform in 2025. That's an interesting one. This has a great list of stocks in the cyclical sector. So if you want to look at the quant rated stocks, again, this is Seeking Alpha Premium. I think it offers you opportunities to look at this stuff. Final, this is an Amazon kind of article because Amazon had their largest day in history. And what have I been saying? Amazon, just buy it under $200. Where are you at now? You're at $215. It's up 1.18%. They are continuing to kill it on AI. They are continuing to kill it on the retail sector. They are going to continue to kill it on cost cutting. If you don't think that Amazon declaring, hey, workers have to come back into the office, that is a play to try and trim the fat. That is a play to say, okay, we're going to keep our top players, but we're going to trim the fat by saying anybody that doesn't want to come into the office, we're going to get rid of you. That's what that is. And so I do think on this weekly chart, you've got an opportunity here because this green line was resistance. You can see how it was support right there. It's going to turn into resistance. And I think you'll trade in this channel. But I do think you continue this upward trend. So it's just one that I have a feeling about. Another one I have a feeling about, Meta. Mark Zuckerberg has been living at Mar-a-Lago trying to get in with Trump. You're at 612. Did you buy more under 600 when I said, hey, just get it under 600? If you have another opportunity to get this under 600, get it under 600. But this particular post is more about nuclear energy. Nanonuclear, NNE, OCLO, SMR, CST, TLN, CEG, CCJ, Cameco, all of those, because Meta is looking to spend money on nuclear power. So all of that is going to be a bull. Meta has cash. It is just a cash printing machine. And if he gets in with Trump and he's able to say, you know what, we want more nuclear. And Trump is like, yeah, let's do nuclear. Let's become the nuclear leader. Boom. Meta and nuclear, perfect together. So take a look at that one. Now let's get into a little bit of crypto. If Bitcoin can find its holding, again, it's not if Bitcoin gets over 100,000. I think it's just when. Is it going to be this year? Is it going to be next year? I'm kind of in the camp that it gets there this year. And if Bitcoin can find its holding, Coinbase has this nice little wedge that seems to be setting up for a move higher. Okay? It could be one of the best stocks to play. It is super, super expensive. Just understand, this is an expensive stock. You are not paying for today's valuation. You are paying for tomorrow's valuation. And remember, IBIT and all of the ETFs that house crypto, they all house it at Coinbase. But is Coinbase going to continue to be the consumer portion? Because as people start buying these ETFs, maybe they start buying less crypto on the exchanges, including Coinbase. And that's where the margins really come in. So when you look at the valuation, it's 56 times forward earnings. That is crazy. The growth, fantastic. 90% revenue growth year over year. Profitability, unbelievable. 85% gross profit margin. Momentum, this thing, 64% just in 3 months. 33% in 6 months, 48% in 9 months. 1 year, you're up 126. Now, revisions, they don't like it. Wall Street doesn't like it. They just don't like the price of this one, and they're bringing their estimates down. When you go and look at Wall Street, the average price target, 266. Now, this particular thing has a gap down here as well at 199. If you can get this under $300, I think you start adding to it under $300. Yes, it's expensive, but this is the premier. Again, if the U.S. is going to be become the crypto capital, guess what's the largest exchange in the U.S.? It's Coinbase. Even some of my friends' parents have Coinbase accounts, and they're trading crypto. So that's what that is. Now, TeraWulf, another, produced 115 Bitcoins in November. This is the one that combines nuclear energy with Bitcoin. It is the two hot sectors. And Stanley Druckenmiller invested in this one. Now, would I suggest you get into this one and just buy and hold? I'd rather see you in Bitcoin, to be honest with you. I don't know what's going to outperform. But in my mind, I think Bitcoin outperforms most of these other things. But I could be wrong. I'm not a crypto expert. But the algorithm just got you in at $7.97. You're trading at $7.36. The MACD has reset down to the oscillator. The RSI is back down at 49 after going all the way up to $9. Okay, if we look at a weekly of this one is just trading right at the 200-day. And will it come back down to the 50-day? I don't know. But the Bollinger Band's just cinched up and they're starting to expand and you're trading on top of the 9-day. It has been running. But I would expect something like this to continue to fly. And they just produced, again, 115 Bitcoin in November. Remember, there are a lot of different ways that you can invest. And one of the ways is just getting into VOO. This particular person, I invested $15 a day in VOO for 50 days. What happened? And then he did a great analysis, including some other stuff. This is literally a 5-minute video. This is shorter than my podcast. So I think anybody who wants to get into VOO and dollar cost average over time, I think this is a great video to watch because they go over, is it better to dollar cost average or lump sum invest? And what does lump sum invest mean? That's the Bob story. That is taking it at all-time highs and just taking the money that you have in savings and putting it into VOO and seeing it go down and then seeing it go up over time because you buy and hold. So he did a great comparison of the two. I'll include that in the newsletter. I thought it was pretty good. To be honest with you, I thought it was a really good thing. Now, let's talk about the Trump trade. And not Trump Sr. This is Trump Jr. This little grifter, and yes, make no mistake, grifter is grifter. He's been placed on a bunch of boards. So yesterday, Public Square, PSQH is the symbol. This was up 270% yesterday because Donald Trump Jr. was named to the board. And you can say it's something, this is only because Donald Trump Jr. was named to the board. That's it. Willie Langston, nobody knows who the F that is. But PSQH, it was up 200. It's down 32% today because any reaction in the market is an overreaction. That's just crazy. That's just crazy. Now, what happened last week or 2 weeks ago? Unusual Machine skyrockets after naming Trump advisors. This one, he was put on the board. It sailed 70%. So if you can get control of this dude's emails to find out which companies are saying, hey, if we give you a board seat for, a couple $100,000 a year where you just kind of show up once every 4 months and just say something, to us, or we can get some names in here, or we can get, you to say to your father, hey, I'm on the board of this company. Can we do something? Drones. Yeah. Grifter elite right there. But again, that's a Trump trade. DJT is another one that you could grift on. I'd trade them. I don't know necessarily that they're going to have any huge pop, but again, my feeling is that just because somebody is named to the board doesn't automatically mean that it's a winning business. Now, earnings. Marvell pops as AI spurs surge Q3 results. Again, we went over that. This one is up 16%. Marvell. This is one that's interesting to me because it's soaring to all-time highs. We looked at this one yesterday and I said, hey, this one, back here, we're just passing that. This could run. And you're trading at 111. You're back to all-time highs. And it's justified. It was a really, really good quarter. And Salesforce, we're going to take a look at this chart. Because this one's up 10% in pre-market. And again, this one I own a good amount of this in my Roth IRA. And I think I'm in at about 223, somewhere in that neighborhood. And you can see it dip down to 251. And you're trading in pre-market at 367. And so if we just look at a weekly chart of this, and you can see when the 50-day crossed up on the 200-day, you were trading at about 267. That's what's called a golden cross, okay? And it traded all the way up here to 313, and it rejected off of that previous high. What happened? We pulled back. We tested the 200-day, and it held. We broke it just during that June 3rd. It broke during the previous earnings, where the earnings weren't very good. But we've had 2 great quarters now of earnings. Benioff is firing on all cylinders. Absolutely firing on all cylinders. And so you can see this clearly. The Bollinger Bands are up. We're trading at the upper end of the Bollinger Bands. Do you want to buy in now? I would look to the 350 level as something to pull back to. And if you can get that, I think it makes sense. Again, Salesforce, it is super, super expensive. The valuation doesn't make sense. But if they are able to cut costs by cutting employees and then raise some revenues from the AI stuff, I think this is a game-changing stock. You can take a look at this. The factor grades, the valuation is trading at 32 times. The PEG ratio going forward, it's 2.12. That's high. Their growth, it's great. It's a B. Their revenue growth, 10% year over year. That's amazing for a company this size. Profitability, 76% profit margin. It's great. Again, they're doing great things with this. Levered free cash flow is growing at 35%. They're printing cash. They will return it to shareholders, or they will do an M&A. Momentum, this is great. 30% over the last 3 months, 41% over 6 months. This is what's driving the Dow today. I think it's like 220 points of the Dow is just with Salesforce of 220 points of the gain today. And if you remember, if we go and just look at the Dow, okay, we're going to use DJIA or DJ. I think it's DIA. DIA is DJIA is the thing. And we're going to go to charting and we're going to select symbols and we're going to do QQQ. We're going to do VOO and we're going to do IWM. And I'm going to get rid of the S&P 500 right there because we just want to do ETFs that you can trade. And so year to date, when you look at this, you can see up there is VOO at 27%. That's the top. QQQ at 26%. And then the third one is IWM at 19%. DIA is the Dow. That's at 18%. So these two, one of two things has to happen. You either have these two come up to meet VOO and VOO and QQQ, or VOO and QQQ come down to meet DIA, the Dow, and the Russell. Again, over 1 year, over 3 years, you're looking at this. Look at how DIA outperforms IWM. So IWM, in my mind, I got, $40,000, $50,000 in IWM. I'm betting big on that one. And I just bought it and I'm just holding it. I'm not getting rid of it. I'm going to hold it for at least a year. I think it's in my retirement account, so I can always get rid of it. But I may add to it. So that's what I say. When Salesforce, again, remember, DIA, if you just look at the holdings, this is 30 freaking holdings, 31. I think 30. The 31st is cash. But United Healthcare is the largest. Goldman Sachs at 8%. Microsoft at 5%. Home Depot. There is no Apple to be found here, to be honest with you. But it's the Dow. So I think Apple is weighted about 3% or 1% in the Dow, something like that. I forget exactly how. But this tracks the Dow DIA. So again, just make sure that you understand which stocks you hold and which ones you own. We're going to go into social requests now because Eli from the newsletter chat. If you didn't know, we do have a newsletter chat. Let me see. Right over here. If you're on here, you can just go to the chat. And then there's a newsletter chat right here. And Eli had mentioned yesterday, he wanted me to go over a couple of things. So he wants me to go over CCL. So CCL is an alpha pick. Well, I shouldn't say that. I mean, it's a recent alpha pick. Just FYI, I bought it. I'll say I bought it as part of my own portfolio. Okay, it's not an alpha pick. I bought it as part of my own portfolio. I wound up buying it by mistake at a larger position, $5,000 instead of $500, and I wound up making 10%. So I wound up selling it. I probably shouldn't have sold it. I think I sold it somewhere in the neighborhood of 26. I forget exactly where. Maybe it was 25 and change. So it's now at 26. It's on a run. I mean, this is a heater. And yet, we're not even back to where we were pre-pandemic. And part of the reason you're not at 45 and 42, these guys took a lot of debt during the pandemic in order to clean up their ships, in order to stay afloat, blah, blah, blah. There was a lot. But the Quant has this as a strong buy. And why is it a strong buy? Well, the valuation's not extended. They're not making money. But when these guys make money, expect this to be a $40 stock. Their growth, phenomenal. 22% revenue growth year over year. The sector is only growing by 2%. Revenue growth, 29%. Okay, but remember, they're not making money, but their profitability, they're able to charge a premium, 51%, versus the sector at 3.37%. Their levered free cash flow, they're losing 2%. So the problem is that, again, they have so much debt and that debt needs payment. But with interest rates coming down, they can refinance that debt and make more money. So the momentum is going to be good. 57% over 3 months. Okay, revisions, all fantastic. There is one person, 1 out of 21, that brought this revenue down. Nobody's bringing their earnings per share down. And when we go and look at the Wall Street price target, Wall Street's price target is 25. I think they're going to have to chase this one up. It is just going up. Now, if we look at a competitor, which Eli wanted to look at, which is Norwegian Cruise Lines, I actually think Norwegian has better offers than Carnival. I think Carnival is just Carnival's like Carnival is probably like the Dollar Tree, and then Norwegian is like the Target or Walmart of cruising. And that's the way I view it, but I don't go on cruises, so I'm not a cruiser. Now, this one, over 1 year, it's up 56%. The Quant has it as strong buy. Eli says, the algo got me an alert on CCL. Can you look at this one for me? I did a bot with this, and it got me in at 2620. Can you also give me your take on NCLH? I have a position, but I have some other cruise stocks. Maybe I need to get exit. So I think cruises are still people are paying for experiences. And as long as you still have a froth in the market, they're going to pay for that. The valuation is the problem. They're not making money. But this one's actually cheaper than Carnival. But again, the growth isn't as extreme as Carnival. The revenue growth, 28% going forward. Their profitability, they're still 39%. The sector's at 37%. So I think it's a toss-up, to be honest with you. If you want to look at charting, and we can select symbols, and we can do CCL. And you can just look at the two to see which one do you want to buy, which one's trailing, and which one's going better. Well, over 1 year, they're about the same. Year to date, about the same. 3 years, you can see that they're about the same. There's not much difference between these two. Even over 5 years, you're down 48% on a Norwegian and 40% on Carnival. So they're kind of trading in the same realm. And when you look at this one, let's see, we're just going to edit symbols, and we're going to get rid of the other ones because I don't care about this. We're going to put in CCL, and we're going to compare the two. So this is probably the best way to do this. You can look at the 1 month returns. They're pretty much the same. I mean, again, they're so similar as far as the returns go. The PE, they're about the same. I mean, Carnival's a little bit more expensive. Revenue growth, Carnival's doing a little bit better. That's why you're trading at a bit higher, price. Gross profit margin, Carnival's doing a little bit better. 1 month price performance, Carnival's doing a little bit better. Just a little bit. It's not much. Does Norwegian have to catch up? Well, they're not doing as well. Norwegian has 332 cash on hand per share. Carnival has 1.5 billion. So imagine if they turn that into Bitcoin. So again, I'm not sure which one you necessarily want to do. Carnival looks like a great chart because it's just passing its 200-day and it's on there. If we look at Norwegian and we look at this one, again, I don't suggest you trade on bots. I'm not a huge bot guy. We're going to refresh this. But Norwegian, to me, let me see. Where's the 4 hour? There it is. Norwegian to me is, I'm not a cruiser, so it's hard. It's hard for me to actually, tell you a great cruise. NCLH, there it is. The algorithm here makes you 91% buying and holding, makes you 69%, gets you in here at 27. If we look at a weekly, I mean, your 200 days just started to turn. Your Bollinger Bands are expanding. Your RSI's extremely stretched at 71. But your MACD's not like super, super up there. It's a little bit up there. The last time it was up here, it did pull back. The stock traded kind of sideways, to be honest with you. So, Eli, I don't know. If you want to trade these ones, I think the algorithm works well, specifically on Norwegian. I think that's a good one. You win 46% of the time, but your average win is 14%. So I think that's what's good there. So Eli, I hope I did a good enough job for you. John from Spotify, great episode, great thoughts on NVIDIA. I've heard you say before you're not a big fan of REITs. Can you explain why? Also in Quantum Universe, any thoughts on RGTI? RGTI, let's take a look at that one first. I mean, I don't have any thoughts on this. The algorithm makes you 177%. RGTI, let's see what the quant thinks about it. Let's see. Quant loves it as a strong buy. I think the average Wall Street, there's 5 analysts that cover it, $3.50. So it's a 18% upside. I think you're good. Growth is the question, and profitability is the question. So valuation, they ain't making money. So I traded on RGTI. I traded on the thing. Now my thought on the algorithm, to be honest with you, what is this, John? John, my thoughts on REITs, very simply, I don't like a REIT because they pay you such a high percentage. They give back so much. They don't spend money on their own business. So I'm a large cap growth investor, tech. That's what I like. So why don't I like REIT? Because I don't need income. I don't want my income. I don't want a company to pay me back. I'd rather have them invest in their business and grow their business. Simple as that. I mean, it's very simple. There are people who love it. Vincent, is Palantir too late to buy? Started hearing about the stock when it was in its 30. How the hell you just started hearing about it when it was in its 30s, Vincent? I don't know. I will buy it later. It's now at 71, and I just don't know. So it depends on your risk tolerance. Here's Shy. Palantir's surge to 70 isn't about valuation. It's expensive. It hasn't been all year. It's about the company's abilities to connect models to ontologies and make them operational. Today's announcement of Amazon Nova models from AWS integrating into the Palantir AIPA platform is yet another example. Palantir is expensive. Is it too late? It depends on your time frame. I'm not sure how many times I have to tell folks this, but it depends on your time frame. And when you look at this one and you look at how fast it's gone, and I have a note in here, 25 is the support. Where's your 200-day? It's at 18, and this is trading at 70. So is it crazy? Yes. Do I think you should buy it? I don't think so, but I was the guy who sold this at 25. So if you're asking a douche on the internet if it's too late, that's a you question, not a me question, because everything about this company other than the valuation says you should just buy it here. Everything else says you should just buy it here. Revisions, everybody's bringing their revisions up. So even the analysts are saying, hey, it's up. But Wall Street, of the 19 analysts that cover this, they have an average price target of 39. 39. And they haven't chased this up. So would I short it? Hell no, I wouldn't short it. There's 3.9%. I think those people are taking a huge risk. There's no way I would. Ogus Erkin from Substack also put it this way. Palantir trading at 350 times forward earnings. 350 times forward earnings. Okay, look at that. PE going trailing 12 months. The PE going forward, I don't know where you got 350 times, but it's 175 PE forward. Okay, that's crazy. Cisco at its height was trading 200 times PE at the peak of its .com. Yes, it's expensive. Still, I wouldn't short it. It's a great business. Market could be a winner, take all. It can stay overvalued way longer than you can stay solvent. So there's no way I would short it. I'm just not putting it in my portfolio. So Vincent, you do you. I say this all the time. You do you, boo. Is it too late? I'm the guy who said, hey, I'm out of 25. So asking a douche on the internet whether it's right or wrong, I don't have your money. I don't know what your portfolio looks like. But my assumption is if you're just hearing about the Palantir at 30, you were kind of late to the bandwagon even then, because we were on that bandwagon at about 8. This one trades really well in the algorithm. If you go and look at the algorithm on this one, it makes you 296%. You may say, well, over the past 24 months, I've made 876% by just buying and holding. Sure. But look at how it got you in here at 27. After getting you out, it got you in here at 21, got you out 23%. Then it got you in back in at 27 on the dip. Got you out at 8%, got you in a little bit higher. Got you out at 23%, got you in higher after earnings. And now you're still in. You were in at 50. So Vincent, my suggestion to you, if you're feeling like it's too late, get the algorithm. Get the algorithm in the 4 hour. Trade it on some type of technical, substantial way that you can say, okay, you know what? I want to look at that. Look at this resistance level. I mean, this is just, we're pulling this back all the way this year. And you can see, I forget where I anchored this one. I anchored this one, looks like right down there where we really start, where the 200-day started to turn on the 4 hour is where I anchored this. And I said, anytime you bought below this, you've been rewarded because it's gone up on that trend line. So you can see this one on this trend. It's huge. If I can grab it and move it. Again, that red trend line, you're still fine. I mean, it's holding up as a resistance. So just buy it underneath, and that's the trend line that you're on. But does it go up forever? No, it won't. Scans, Palantir, in fact, it just gave you another indication because the MACD just crossed up on the 4 hour, and you can see it's going up there. But the RSI is at 72. Would I buy it? No. Even though the algorithm, you'll see it on my scans in the newsletter. You'll see Palantir is one of the scans that shows up. Would I buy it? No. It's not within my wheelhouse. NVIDIA, we can talk about that one. They gave you a new buy-in at 140. Did you buy it under 140? Because we're at 141. I think you're fine buying it at 140. Again, you win 67% of the time with the algorithm on this one. So I think NVIDIA, I think you can buy it. A-Lab is in our watch list. This is one that just showed up on, right here. It got you in at 41. It gets you another, the MACD is reset. The RSI is reset. And it says, hey, we're going to go higher. Could it go higher? It could. I mean, when you look at a weekly on this one, I don't know. We don't even have a 200-day on the weekly. We don't even have a 50-day on the weekly because this is still brand new. But over the last 8 months, the algorithm makes you 74%. Buying and holding makes you 116%. So this is an AI play. I don't know much about it, but it's on the watch list. Duolingo, PDoDo, Micron, MU, Charter, AT&T, DJIA, which is an income ETF for the Dow. You got leveraged ETFs and NVDL, which, we just talked about NVIDIA having a cross up. And NVDL right here at 73 gets you in right there. Now, over 24 months on NVDL, which is a 2 times levered NVIDIA daily, you make 1,062%. Okay, you win 53% of the time. So it's essentially a coin flip whether this 73 makes you, and your average win is 43%. The valuation on NVIDIA, by the way, we can talk about Palantir. Palantir valuation, you're trading at 175 times forward earnings. NVIDIA, you're trading at 46 times forward earnings. 46 versus 100 something. So in my mind, I think the better risk to reward is NVIDIA. But again, you do you. So if you have any questions, you can hit me up. My email is right up here on the upper right. I will change this link tree to say no more Black Friday and Trendspider. But the Black Friday deal continues with Seeking Alpha. They will stop it. Just like Trendspider stopped theirs. They're going to stop this. This will go back to the regular price. So before this ends, and it ends, I think today or tomorrow. I can't imagine that they extend it. They didn't tell me when they're extending it to. So make sure you go to the link tree and click on this one. This is the bundle right there. Okay, the Black Friday special. And you can get it for, if you just want Seeking Alpha because you don't want alpha picks, get the Black Friday, the normal price. You're normally saving $30. You're saving $90 off of Seeking Alpha Premium. But Alpha Picks is the one that I would suggest that you get. It makes me question why I have a podcast. Because they do so good. This is what you get. 2-day data-driven stocks a month, access to the entire Alpha Picks portfolio, hold and sell alerts, regular performance updates, member-only webinars hosted by Steve Kress and the Alpha Picks team. And again, it's $300. It's normally $500, and they're giving it to you for the next year for $359. And with that performance, you should beat that $359 and make that back no problem. So if you have any questions, hit me up. Okay, I will talk to you tomorrow, hopefully.
Every morning I wake up to the sound. of the trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.